demonstrate the difference between the classic stop loss and take profit, and the usage of a hedging strategy to manage a losing trade or a basket of trades. Great. Regarding the RobotFX Fluid Expert Advisor, I'd like to remind you that this Expert Advisor can use both the classic stop loss and take profit. They are set in pips, or it can hedge a losing trade or a basket of trades. And it will go like this. To enable the classic stop loss and take profit, by default set at 50 pips and 150 pips. You must disable the allow hedge option. So set this to false. You can ignore the other two, hedge zone and hedge fluid zones. We are not considered right now. Once the allow hedge is set to false. And don't forget to allow sell and allow buy, which by default are set to false, just to allow you more time to check the settings before you start using this Expert Advisor. So, to use the classic stop loss, set allow hedge to false and start it. I will use, by the way, let me load my template. I'm using only the first 2 weeks of the 2015 year. So I'm on January 1st. I will stop at January 15th. It's enough. We have enough trades just to see how it works and demonstrate this. So now the Expert Advisor is not hedging. Instead, it will set a classic stop loss after the trade is open, so it will make it comfortable with ECM brokers. And our settings, I remind you, they were stop loss 50 pips and take profit 150. And the first trade opens once the by the way, we are following the trend in this example, in this demonstration, and the trend is enabled by default in the default settings. It's set to true. So once the non-lag moving average changes the color from white to black and the trend signals align, price under the slow moving average and fast moving average below the medium moving average, the Expert Advisor will open sells only. So we have the first trade opened. It has a regular stop loss. So at 50 pips the price goes down and it hits the take profit. So far so good. After the non-lag moving average will change to black, from white to black, it will open another sell, as you have seen. And if I remember well, the price will not reach this stop loss. It will be another win. Price bounces a little up and down from the price line, and once it will reach 50 points. We have a break even set at 50 points, by the way, 50 pips, I'm sorry, not points. And once the price moves 50 pips away from the entry price, it will set the break even. To activate the break even, which has a buffer of 5 pips. So now if the price will reverse, the trend will reverse, we are covered, cannot lose it anymore. And stop. For this demonstration, and by default the Expert Advisor is set to close winning trades once the color of the non-lag moving average will change. So in this case we were selling, and the non-lag moving average changed from black to white here for a bar or two, and that made the expert advisor consider that the price might go up, and so it closed it in profit, 42 pips. And then it changed back to the color changed back from white to black, and it opened the next sell, since we are aligned with the trend. Break even activated, we cannot lose this one, no matter what. The non-lag changes the color again, and the expert advisor closes the trade in profit. Another one is open. Looks like January 2015 was a great month to trade, or at least to trade like this, or to trade using the RobotFX Fluid. Expert advisor we don't need this indicator. No. And we lost one trade. The price turned and hit our stop loss. Expert advisor opened another sell. We still have a downtrend, or had a downtrend, on the sell signal. That one closed at break even, then another one. The break even is active now. This is a winning trade so far, and the non-lag will change the color and expert advisor close it again. 45 pips profit. Immediately opening another one. Another loss. The price turned had a fast move up, like a spike, and that it hit our stop loss. Sorry. 15th January. Okay, so we close here. Stop. Another win. Take profit 150 pips, as it was set, and it remains set in the expert advisor default setting. Okay, so nothing new so far. The stop loss, it's just a regular stop loss. The take profit is just a regular take profit. If you want to see the report, we had a drawdown of 1%, $34.35. Let's make it round. $35 win, and the graph looks like this, and 2 losing trades. This is, I remind you, for demonstration purposes only, just to see the difference between trading with a stop loss and trading using a hedge strategy. Now let's change and set allow hedge to true, and we will use first the hedge zone option. If the allow hedge is set to true, you must use only one of these two options. We have two methods to hedge a losing trade, two hedging strategies, and these are the zone, recovery zone, and hedging a recovery zone and hedging fluidly with the trend. Let's try the first one. Hedge zone set to true. I will explain immediately. We leave everything else, all the other settings, as they were. Stop loss is 50 pips and take profit 150 pips. Start, same 2 weeks, same template so we can see the trend. And break. And since we are not using a regular stop loss and we are hedging instead, the expert advisor doesn't set a stop loss for this order, the first order, this sell. It will set at the 50 pips distance away from this order, the opposite side. Instead of a stop loss, it will set a pending order, a buy stop of in this case double the size, the first trade. It doesn't have to be double. It is calculating depending on the ratio between stop loss and take profit. It should be less than double. Anyway, let's see what happens. And I remind you, we are hedging the zone. This trade went well. The price didn't go up, it didn't hit the opposite order. And the second trade, if I remember well, the price doesn't reach 50, doesn't reach this level. I'm sure it didn't reach the stop loss before. No, it didn't. So this should be a winning trade too. Again, one sell and one opposite order takes place of the stop loss, of the regular stop loss. Break even active. Break even again. You can choose the break even of whatever number of pips you want, as well as the break even buffer. By default it is set to activate 50 pips away on the buffer, or the locked in profit, as some traders like to call it. The locked in profit is 5 pips. And I think this is the time when we'll have a basket. Trades. I'm trying to remember. Yes. Break, pause. Now we had a sell of 0.01 and the opposite order, a buy stop of 0.02. Once the price reached the opposite order and activated the buy stop, which became a buy order, an open order, it immediately set another pending order, a sell stop of 0.02 at the initial entry level. So now basically the expert advisor will keep opening buys here on the upper line and sells here, the lower line, and this will be the recovery area, the recovery zone. And it will keep opening orders, opposite orders, until the price will either go up or down and hit the minimum profit, which is set by default to $1. We also have the real profit on the chart. Right now we're at negative, minus $4. And once it will reach $1 for the entire basket, then we'll close all trades in profit. So this is the hedge zone. option. This is how to hedge using a recovery zone. A fixed zone. It can be effective. It's not my preferred type of hedging because it allows I feel like I don't have any control. The expert advisor just opens, buys and sells at this price levels, like oh no, it doesn't make much sense, but it can still manage a losing trade, and it's still better than a classic stop loss, or it can be if managed properly. Open another sell and set another buy pending order 0.02 again. I remind you that the pending order lot size, it's calculated so if the price will now reverse and go up, the profit will increase until it will reach the minimum profit. Now if it will go down, it's so calculated that the profit will slowly increase until it will reach the minimum profit again. Break even for the last two trades which were closed. The expert advisor calculated again the difference. Let me make this smaller. No, worst. Okay, stop. Eventually, the price broke out of this small consolidation area. You can see it here. These are times where usually traders stay away from charts like this. Nobody likes to trade, or I don't like to trade at least, consolidation zones. One reason is we don't know if the price will break up or down. So that's why personally I like to trade, and I think it's a good thing to trade with the trend, always. But I got stuck here and the price went against me enough to open the opposite trade. Anyway, this is not the point. The conclusion is that the expert advisor managed to manage a losing trade, or two losing trades if I remember well. We had two losing trades using the normal stop loss and transformed them in winning trades. So we didn't lose anything. Maximal drawdown was 3% in this case. That's because it opened more. It was more than one trade basically, and it might look a little dangerous, but than the normal stop loss, but it is not. It's how you do it can make it win, and the profit is a little smaller too. Again, this is for demonstration purposes only. And now let's change the other hedge strategy. We set the zone to false and we hedge fluidly, and you will see the difference. I also think you will like it if you start to get the idea of hedging, and you'll do it fluidly probably. Same period. We already know this is a winning trade, if I'm sure I remember well now. Huge spike down. Exit trades, a trailing stop. Another winning trade. The price, I remember, it doesn't hit this level, the buy stop level, or the stop loss level. Meanwhile, the non-lag moving average changed from we're still in this trade, changed again from the white to black, but since it was higher in this case, it didn't open another trade because the profit was negative, and we must have a profit bigger than the minimum profit, higher than the minimum profit, for the expert advisor to open another trade. Besides this option, it's not active in the default settings. It is set to open and manage only one trade. I think at the beginning, when first starting to use this expert advisor, traders should start from the default settings and slightly change them, especially the entry signals and the trend signals. Tune those settings to match your pair, your time frame. Don't change them too much, because they are not bad settings, they are good settings, generally speaking. They still need to be tuned a little. Let's see, first basket of trades, will it open or not? And it did open. Mind that we had the sell open here, and by the way, for both of these options, the hedging strategies, the hedge zone and the hedge fluid, the first opposite trade will be the same. The one that takes place of the stop loss will be the same. I mean, the expert advisor will act the same. We'll open we'll set a pending order at the stop loss distance, 50 pips away from the opening trade, and it will be calculated. So if the price will go high now, it will be in profit. I mean, the basket will be in profit, and once it will reach the minimum profit, again by default set to 1, which is dollars, it will close the basket. However, now we are hedging fluidly and we don't have a recovery zone anymore. We are not opening blindly trades on these two levels. Instead, the expert advisor opens because the price hits the opposite trade, the stop loss trade. And now, if we have the trend signals aligned, it will open more trades and it will calculate the lot size based on the trend and the non-lag moving average. So if the non-lag moving average, which is now white, the black and white line, will change to black at anywhere on this chart, any position, and the trend will still be down, the expert advisor will open another sell, probably 0.02 or 0.03 lots. Let's see. Price goes up, non-lag moving average is white. It turns and there it is, the sell 0.02. Price drops, the minimum profit, stop or break, pause. The price drops after we open this third trade, based entirely on the trend. Trend is still down, the non-lag moving average changed the color, and the basket closed when we reached the minimum profit, or when the real profit reached the mean profit, $1. So for these three trades we have a profit of $1, one losing, and one winning, which cover them all. Let's resume now to see what else happens. Well, now we still have a downtrend, as I see, and the expert should, the advisor should open another sell. There it is. What happened now we don't know. I don't remember again. The price drops. I think this is a winning trade. Yes, we set the break even already. And the non-lag moving average changes the color to white, and the expert closes this a winning trade. Now it opened another sell, but in a bad moment. Not the best trade. And I think the price will hit the buy stop. No, it doesn't. Actually the price went down. Or not. It hit the stop loss. We still have a downtrend. The EMA's aligned for a downtrend and the price is below the slow moving average, and it opened another sell, 0.02, with the trend, according to the trend, and closed it again when the price reached stop. Close it again when the profit reached the minimum profit, and we close here. Here we also stop the demonstration. I hope you understood now the difference between hedging or no hedging. It was the first one, using the regular stop loss and take profit, hedging using the recovery zone, and hedging using hedging fluidly based on the trend and the swings or the price. Basically we are following the price. We are not afraid to do that.